If you're buying a home for the first time in today's market, check out my top 10 first-time home buyer tips, or shall we say secrets, every first-time home buyer needs to know. Let's get into it. Tip number 1, if you want to buy a house and you're not a cash buyer, you've got to get pre-qualified. I know, you're like, I don't really want to do that. Guess what? You shouldn't get into a car with a real estate agent unless you know what you can qualify for, especially as a first-time home buyer. So we will make it painless. Okay, maybe not painless, but there's just a process that you have to go through, and trust me, when you go through it, you are empowered, you know what your payments look like, you know what your budget is, and then you can get out there and go find that perfect house. Tip number 2, what credit score is needed to get approved for a home loan? Well, this is going to vary based on the loan type. Every loan program has its credit score thresholds. And it's important to know that some lenders will have their own credit score threshold on top of what the program requirements are. It's good to know that there are programs out there that offer as low as a 580 credit score, but it's really not about credit score. That's one part of it. It's going to be about the credit profile, no matter what your credit score is. Lenders are going to be looking for what's really going on your pay history. So have you had any late payments past 30 days in the last 12 months? Have you gone to collections or charge-off status in the last 12 to 24 months? That's going to make up your credit profile. What are your balances on your accounts? All of that is in the mix when it comes to credit and applying for a home loan. Tip number 3. Now, this is one of my juicy secrets that not a lot of people understand, and that is how to increase your credit score. Right? Everybody wants to know that. The number 1 tip I can give you on this is watch your balance in relation to your limits, especially on all revolving accounts. So for example, if you have a $10,000 limit on a credit card and your balance is $10,000, that right there, even if you've never had one late payment in your entire history of having a credit card, even if when that balance to the limit is maxed out, it's going to drop your credit score. The sweet spot is keeping your balances at 20% or lower of the limit. So in that scenario, at a $10,000 limit on your credit card, you don't want to charge or have a balance running at $2,000 or more, right? You want to kind of keep that balance at 20%, which 20% of 10,000 is 2,000 or lower. And the other big key is just paying your payments on time. Now, if you go past your payment due date and maybe you're in your grace period, but it hasn't gone a full 30 days, that's okay, pay it. From a credit scoring standpoint, when you go past 30 days late, that's when it becomes an issue, and that's when it starts to impact your credit profile and your credit score. Tip number 4. You don't need to put 20% down. Now, if you haven't and that's what you want to do, great. But so many people I talk to, especially first-time home buyers, think that they have to have 20% to put down to buy a house, and that is just not the case. That is just a crazy myth, and we got to debunk that today. There are many low down payment programs out there. There's some down payment assistance programs out there. Lots of different programs to help you get into that house for less than 20% down. Tip number 5, down payment funds. A lot of people think that it has to be your own money. Here's the secret. You can use your own money. It can be a gift from a family member or relative. You could borrow it against your 401k, or you could look at using approved down payment assistance programs. Down payment assistance programs vary across the city and state and country. In general, they are there to help buyers purchase a home. And so those down payment funds can be used for down payment. Sometimes they can be used for down payment and closing costs. And there's rules and criteria that each of these down payment assistance programs have, but it is a great option to explore if you don't have any money or any other resource for a down payment. At this point, you might be thinking, this is sounding pretty good. If you're ready to see if you can pre-qualify for a mortgage, click the schedule link below to schedule your free 15-minute consultation. Let's get right into my next 5 tips, or shall I say secrets, because a lot of people might not know these things. Some lenders might not either. That's why you need to work with an experienced lender to help you achieve your home ownership goals. Number 6, what's required to get a loan? All right, now this one, there's a lot here, so stay with me. First, the lender's going to document what income that you're going to be able to produce that meets the lending guidelines, that the lender can determine that you have the ability to repay the money that you're borrowing. If you're employed, if you're using employment income, how long have you been there? Do you work variable hours? What's the average of hours you're working? Are you self-employed? Do you have a second job? All of those questions are going to go into the employment part of the equation, as well as the income part of the equation, because the employment will drive the income unless you're retired and receiving Social Security or pension, and that's perfectly fine. That is documentable, and that is something that the lender will dive into with regard to your particular scenario. Once income's determined, the lender is going to look at your credit report and ask you about the debts that you have. So in addition to anything that's on credit report, do you pay child support or alimony? Those will be calculated into your debt to income ratio. The debt to income ratio is also one of the lending guidelines and thresholds that each lender has. So once we evaluate your income and we know what your debts are, then we can back into the price point minus the down payment of the home that you can pre-qualify for. Tip number 7, you may be wondering what loan programs are available. As a general rule, there are 4 types of loan programs available in our country. 1 is going to be an FHA loan, 2 is going to be a conventional conforming loan, and 2 gets an add-on, we'll call it 2B, a conventional jumbo loan. And then there's VA loans as well as USDA loans. Each loan program is going to set its own credit criteria and requirements. Tip number 8, who are the people on your lending team? Now, many times you're talking with your loan officer or their loan partner, but realize there's a lot of people in the village that you have behind you on that lending team. So a couple of those people are, you're going to have your loan officer. Many times you'll have a loan officer support team, and that could be a loan partner, a loan assistant, somebody that's supporting the loan officer, a strategy technician. We see that a lot in lending as well. And the reason for all these different people is it takes a village, honestly, to get through the loan pre-approval process. And so the lending industry has gotten very good at finding the skills for the people that's needed. And so that's why there's a lot of people that are touching your home loan file as you move through from the time you apply to the day you get your keys. Another one of the very important roles is going to be a loan success coordinator or processor, depending on the lender that you're working with. They're responsible, once you're under contract, they're going to take your loan file and make sure that you're keeping to the timeline and you're closing on time. They're going to ask for additional documentation. They're going to prepare and make sure that your closing disclosure is issued to you on time. They're going to review all the numbers, pull in your homeowner's insurance, your title company fees, all the different fees and costs that are associated. The loan processor, or in my world, loan coordinator, is a very, very integral person that helps people achieve success of home ownership. There's also an underwriter. The underwriter is the person that is going to actually sign and approve your home loan. They're going to review all of the documentation that the loan officer and team has submitted into underwriting, and they're going to ensure that it meets the lending guidelines. Once you have your loan approval, the loan closer, so the person that's responsible for preparing your final closing disclosure and your final loan documentation that you'll need to sign, that's your loan closer. And then once you've signed those documents, behind the scenes, which is where most of this is happening, the loan funder is going to prepare to have the wire for your home loan funds sent on the day of closing. Tip number 9, how do you get a lower interest rate? One way to get a lower interest rate is to maximize your credit score. So better credit scores can drive a lower interest rate. Another way that you can get a lower interest rate is to consider a seller buy down program. And that's where the seller would contribute to your closing costs, and the lender in that scenario is going to use that contribution from the seller to lower your interest rate. And finally, another way to lower your interest rate would be to pay discount points. And discount points are a cost associated with a respective interest rate. For example, maybe the lender is quoting you a particular rate and it has 0 discount points, meaning that there's no cost for that rate, but you want to buy the rate down. Let's say that you now ask the lender, what interest rate can I get if I pay 1% in discount points? Discount points are 1% of your loan amount. So if you're taking out a $400,000 loan and you're going to pay one discount point, that's 1% of $400,000 or $4,000. And now what you'll want to know is, for $4,000, how much can I buy down my interest rate? Interest rates and discount points are going to vary every single day. They're going to vary based on the loan program that you're purchasing, the occupancy. Is it going to be a primary residence, a second home, or an investment property? Lots goes into the interest rate discussion. It is good to know that when you see stuff published out there online, many times that is for a point in time. You got to read the fine print, because that's where all of the detail is that's leading to that rate quote that you're seeing out there online. Best to talk with your lender to decide what your scenario is, and then the best strategy for you to obtain the lowest interest rate. And tip number 10, things not to do during the home loan process. Don't change your job unless it's absolutely necessary, and if it is, be sure you're telling your lender before you're changing jobs so they can get all of the details and ensure that it's not going to impact your pre-qualification. Don't go buy a car or appliances. This is always a big one, especially for first-time home buyers. You're getting excited, you're close to getting down to the close of escrow and getting your keys and moving in, and you might need a washer and dryer. So you go to one of the big home improvement stores and they're offering, 0 interest for 24 months, and you apply. Guess what? That's still a debt obligation, even though that there's no payments for 24 months. So what happens is the lender has to calculate that into your debt to income ratio. And if your debt to income ratio is tight, that could put you in a position where you can no longer qualify. So these are the things that you absolutely want to be thinking about as you're moving through the home loan process. If you have questions before you buy a car, buy appliances, change jobs, be sure to reach out to your lender and ask them, is this going to impact my home loan pre-qualification? Now that you know my top 10 tips, you may be interested in getting pre-qualified. We can put together a personalized plan for you. Schedule a free consultation with one of my amazing team members by clicking the link in the description below. Be sure to subscribe to this channel for more mortgage education, and check out this next video on why credit scores differ. I think you'll find it very interesting.